What is up, traders? Hope everybody's doing well. A continuation series for the bias lectures. Today, I'm going to be doing a top down analysis on today's price action. And today's price action was very high resistance. Liquidity runs price was very hard to read. And today is going to be a nice example of where you have a clear bias, but price just proceeds to go in the opposite direction, and you will have to adopt. So starting off on the higher time frame, let's assume we are obviously coming into the morning session. This was the candle that was printed. The other three candles on the 4-hour chart were not printed. So we're going to just keep in mind, I'm going to remove this, but keep in mind that we're not looking at the three candles right here, right? They were not printed. Okay, so coming into the session, obviously on the weekly outlook, I had talked about that I want to see price, how it responds or reacts after it sweeps this low. We gapped lower, swept this low on the gap open, and then rejected higher. We had this 4-hour SIBI, right? We had swept this high. We have lows here, so generally the bias is bearish, right? We were currently in this sell side imbalance, buy side inefficiency, right? That's what we can see from this 4-hour chart, and we have this daily inverse fair value gap. Okay, that's on the 4-hour chart. Now we drop down to the 1-hour chart. On the 1-hour chart, we can see this SIBI right in the same region. We were around this candle right here. This is the 9 a.m. candle. So let's look at this. This is the where the morning session was around. We were in this SIBI, trying to see how price reacts if we can see price drop down, because now we can see all of this sell side liquidity, which will be more apparent now further when I drop down to the 15-minute and 5-minute and so on. So we have all this sell side liquidity with a 1-hour SIBI right here. So that's kind of aiding the bias, right? We have this SIBI, this sell side here, and then this BISI, sorry, I think I said SIBI for this one, BISI right here to target, which also we have the new week opening gap for this week is right around here. So that's kind of how we're going on to determine the bearish bias for this session. Dropping down to the 15-minute, we can see that trendline liquidity much more clear now. And if we go from this low around, I believe it was this low right here, we have London lows, right? So you're going to tell me, and you're like, okay, London, remember the session lecture, it was from 2 to 5, so from 2 to 5. But at this point, from 2 to 5, the lowest low is like this. But then if you look to the left, it just like it's basically equal lows. So there's no point of denoting this one, just denote this one, right? So it's the same shit, probably. So just London lows, right? Same, it's no difference in price. It's all this equal lows right here. So denote that, and then the midnight price obviously denoted that right there. So you have the midnight price here. The London lows are right here. And we were around at, let's say, 9:30, 9, let's say 9, around this region. And we have the 4:14 close, or I have it here at 4:15 from last week, because this is Monday. The close was here. So we were, as of now, we still don't know where we're going to open exactly, but we were roughly around this region. So we were around 100 and, let's say, 50 to 80 handles away from the previous close. So that's one of the signs that we might just continue up, because I said, if we're 120 handles plus, do you want to expect price to just continue higher because we're just too bullish? So that was the first sign, kind of telling that, okay, we might continue up higher, but that's not just alone, that's not enough of a sign, right? We have multiple signs right now aiding our bearish bias. You have this SIBI here. You have all this trendline liquidity with London lows resting back below it. So we're trying to see if maybe we can sweep this buy side here on the 15-minute chart. You can see that. And then see if we can get a breakout structure to the downside, right? Beautiful. Now, drop down to the 5-minute, sorry. On the 5-minute chart, we can see how market opened, right? Here's 9:30. We can see, we're going to see it better on the 1-minute chart in terms of the exact candle, but just focus right now on the 5 minute. We can see how on the 5 minute we're obviously in a bullish order flow. We have this sell side that I talked about right here, right? With that ultimate low right there, right? That's what we're trying to target. That's the bias. But then if we look on the 5 minute, we're respecting bullish order flow, right? We're just making new highs. What's this right here? This is a 5 minute bullish OB. If you guys remember from the lectures, right? You can see how price has tapped into it, respected it, and is pushing off of it. So yes, our bias is bearish, but we have to accustom to what the market is telling us. It's respecting bullish order flow, right? So what happens is it sweeps this buy side liquidity with market open, okay, which is this buy side, which is also apparent in the 15-minute that I showed you guys just before this chart. After we sweep it, okay, we want to see if we can possibly get a breakup structure to now target the sell side down here, right? What happens is on the 5 minute, we're still respecting bullish order flow. I mean, we've come down, respected this 5 minute order block, pushed, made a new high. Now we've come down. What is the lowest down close candle? It's this. Now this is the new order block right here, right? This. So now we've pushed, we've come down, we've respected it again. We've come down with a wick, but we've closed all the way up here. So is this disrespecting this 5 minute structure? No. So since now we've taken buy side, right? So I'm not interested in going longs, but also at this point, I'm really not interested in any shorts because nothing is aiding in terms of structure for me to enter a short position, correct? So if we drop down to the 1 minute, we can see here how we opened, right? This is the 5 minute order block that I marked out. We have market open right here at 9:30. Or I'm sorry, I think I have this noted wrong. See, I denoted the close. This is incorrect. You have to denote the open. So this is the 9:30 open. Sorry for that. No problem. So 9:30 open right there, right? We can see how if we try to look for the first presented, this is the first presented fair value gap from the first presented fair value gap lecture, right? Put that in green, and I'm gonna take this off completely. Okay, so you have this is the first presented fair value gap, right, in green. So we can see how price comes up, respects it, pushes up. I'm not interested in entering longs. You could have entered this long, but since our bias is bearish, we want to focus more on sells more than longs. We want to minimize the amount of trades we're taking. We don't want to take longs and short. It's not like you can't, but especially now as a beginner, as starting out, you don't want to be engaging too much, right? Now, yes, we've come down, respected it, we've impulsed away. We never really got an entry, but we've impulsed away during macro, right? 9:45 is right here, so we swept the high during the macro. Okay, cool. Now I want to see if we can get a breakup structure to the downside. Now, looking at this right here, right? I'm trying to look short, to take a short after I sweep the sell side, right? So if we go back to the market structure, we have market making higher highs, and then at one point it sweeps and then breaks structure, right? Here, where is structure? Is this enough of a structure, this down close candle? Some could say yes. All right, no problem. But you also have to keep in consideration equilibrium of this whole move, right? Where we could easily have a retest. Plus, since we have the 9:30 value gap right here, we can easily come down, tap into the 9:30 value gap, and then retest up. Plus, on the 5 minute, we have this 5 minute order block that I talked about, right? So until we turn this 5 minute into a breaker block, which we mean it closes below, and at least we inverse the 9:30 value gap and impulse away, we're still bullish, right? So you could have entered sell here, but guess what? You would have, if you're trading correctly, you would have had to take TP here. So your trade would have been something like this, which you would have won, no problem, right? Done something like this, and then you would have had to put TP here, or even if you wanted to push it, just at the 9:30 value gap, quick things in and out, right? So this would have been a valid trade, but you could not have held this. Why? Because you have this 5 minute order block that we talked about. Price is premised to come back down into it, right? Retesting into it. And you have the 930 value gap, which price could come back into it, which happens a lot, by the way, and then push away from it. So if you would have entered shorts here off of this fair value gap over here, right, during the macro, which is not incorrect, right? You have this fair value gap right there. Entered shorts on the tap after breakup structure on the 1 minute, stops above the high. At max, TP would have been here. You can't hold it longer than that because you don't have confirmation. Price could easily come down, respect it, and push up higher, which it did, right? So that's why you really don't want to be entering unless we just close here, or you could be entering with very, very light size. But as a beginner, you want to be entering when confirmation is 100%. And that will be, in this case, the 5 minute to completely close below this, right? Making this a breaker instead of an order block, and then looking for an entry on the 1 minute. So the bias is shorts. We didn't get that. Order flow on the 5 minute, we can see here, is showing that we're just pushing up higher and higher and higher. I'm not looking to take any longs because my bias is short for the reasons that I outlined. Look at this nice, very smooth sell side. So what do? You wait. You wait for the second macro. I'm going to go down to the, I'm going to go up to the 15 minute. The second macro, right, we can see here how price is also respecting bullish order flow on the 50 minute. Now we can see price is pushing, and then during the 1045, which is this candle, 1115 macro, that is a macro that you would want to trade. What could you trade at that macro? Let's drop down to the 1 minute. It's short-term sell side. Since we didn't get an entry in the first AM macro, you're looking to enter a short, in this case, target short-term sell side. In this case, where is that sell side? You have the 1045 is right here. I'll mark that in this horizontal line, 1045, boom, and then 1115. Right, there we go. So in this macro, I am looking to enter shorts. In this macro, I'm looking to enter shorts to target some short-term liquidity. What is that? Well, we can clearly see that we have this low with an inefficiency, right? So let's mark out this right here. But, so I'm trying to target that. But if you go back up to the 5 minute, because you're trying to target the low hanging fruit, okay? There's a 5 minute fair value gap right there as well. Cool, we can target that. Go up to the 15 minute. You can see how the 15 minute fair value gap starts right here instead of here. So price could easily just tap into this and then reverse and continue higher, especially because we're in high resistance liquidity conditions. And by the way, how do we even recognize that we're in high resistance? First of all, from the price action, but before even the price action, if you go back, this is this Monday was the 10th of February. You can see that down on the cursor down. This week you have major news on, I believe it's Wednesday and Tuesday, right? So when you have major news on Wednesday and Tuesday, Monday is going to be garbage price actions. Price is just going to anticipate the news to come out on Wednesday and Tuesday, and then Thursday and Friday will have cleaner price action, right? So even before the week starts, Monday is going to be very low probability because today we had no news, right? And there's major news coming up on Tuesday and Wednesday. I'm going to show you guys, by the way, right now when we're done. I'm going to go to the Forex Factory so you don't have to do it yourself. And I'm going to show you that how there's no news on Monday, there's major news on the next day and the day after. So market is just going to be very, very slow on Monday. So even before the market starts or the week starts, we know that this day is going to be low probability because of these factors. Plus, when we came in, we can see that the market structure is just absolute garbage, right? So since we know all these things, I'm not looking to target this. I'm going to target this now. Low hanging fruit, right? So I'm going to do this now. So if we drop down to the 5 minute, what is it? Or the 5 minute, sorry, not the 3 minute. What is this? Okay, this is the other 5 minute low. Okay, what's that on the 1 minute? That's this low right here, right, cool. So I'm not gonna target this. I'm gonna target this. So during the macro, I'm gonna try to look for a short position, right, in this macro, in this region to target this sell side. So we start to look for an entry, right? This is where the sauce starts to come in play, looking to target this sell side. All right, reason for entry. First of all, time of day, 10:45, 11:15. I want to see a reason to enter. Pull out ES and look for S&Ts to kind of aid the confluence, of course, right? So let's go. This is where we have, this is ES right here. Okay. So ES is the same time. You can see the cursor right around the same time. All right. No SMT in terms of the 1 minute. No problem. Time of day came, and then we can see how we have this 1 minute order block, right? Because we're making higher highs, and then we come down and then make a new high, right? So now this is classified as an order block. We can enter off of this being disrespected, right? I'm gonna put this in a different color. Let's do this, right? I'm looking for this order block to be disrespected and now treated as a breaker block during this time of day, which happens right here. All right, I'm gonna zoom in on this so you guys can see this very clearly. All right, and then I'm gonna take, oh, let's leave these on. Okay, so time of day, I'm looking for a reason to enter. This PD array to be inversed, right, or disrespected, to now to be respected as a breaker block. As soon as that happens, short position, right, happens right there. Short position, stop loss above the high, and then TP right at these lows. By the way, this trade was taken, and I did take this trade, right? So we have the entry, right? Now, during the time of day, I'm looking for this low to be swept right here. But very important point, this low, where is that on ES? Because from the SMT lesson, or from the SMT lectures, I said that SMT could be a confluence to enter and to exit a trade, right? Very important. So that same low is this low right here, right? So this low right here is this low right here. So let me do this. See, it's the same low right here at 1022, 1020-ish, 1022 right here, 1020-ish, this same low. So if ES sweeps this low and NQ doesn't, I'll cash out. I want either one to sweep. Guess what? We're in high resistance. That's number one. Number two, that could be an SMT for price to then continue higher. I don't want to be a part of that. I don't want to lose all my profits. So as soon as ES sweeps, I will cash out on NQ. So I'm in the position, right? The position, and we can see how price is just very, very slow. Look at this price action, absolute garbage. If this was low resistance liquidity, we will inverse this order block or treat it as a breaker, maybe retest into it, and then all this wouldn't happen. It would just boom, quick, like within 5 minutes. But this was a lengthy trade because high resistance liquidity run again. So we can see how price comes, disrespects it, comes back up, never re-respects it, by the way, right? And then during all this time, ES still didn't sweep that low that we were talking about, so it's no problem. And then we can see how here price finally, it made this volume imbalance right here, right? So I marked that out during the trade. I'm gonna mark that out right here. And since we're in high resistance liquidity runs, we broke lower. I could expect price to come back up and tap it, and we can see how price came up back and tapped it. Never closed above. It wicked above, right? Wicks do the damage. Candles tell the story. That's why you don't cram your stop loss, especially in these conditions. So when finally price came up to it, and now at this point I said, okay, we could possibly now see prices lower. That's exactly what happened. And around this region, let's see what was the time of this candle on ES. This was the 11:19 candle. So 11:19 candle, 11:19 candle. It was this candle. This candle swept on ES. As soon as it did, I closed my position on NQ, so it resulted in a even shittier, honestly, risk to reward. But I did also trail my stop loss along the way. So remember when we made this low, I trailed it to this high, and then when we came up to this volume balance and broke lower, I also trailed my stop loss to this high right here. But regardless now, ES swept. So as soon as ES swept, because I don't want SMT to form and it's possible SMT, I cashed out, and that's it. You don't want to be too greedy, especially in these conditions, and that's how you just determine your bias, right? Either the first AM macro, second AM macro, before the session starts, all that. And we can see here how price, we did sweep, we never really swept this until later. Like if we kept this on and we put our stop loss to break even, we would have been stopped out here. And even if we didn't, and when this week happened, we were not at break even. And then when it did happen, we moved our stop loss to this region because it came all the way down here and never really swept. And it came back up, swept this high, would have stopped us out, obviously 100%. And then it swept during the 1150, 1210 macro, right? Swept this high and then swept this high. And then after that, the day just did nothing, right? So very high resistance liquidity runs. And this is how you determine bias. And you kind of go with the market is telling you, even if you have a bias. You can't be married to your analysis, right? So that's going to be it for this lecture. I know it's kind of, there's a lot of probably information, but if you need to go over it again, please feel free to do so. That's going to be it. Hope you guys found this insightful. If you have any questions, feel free to ask them. Until next time, stay safe and happy trading.